Mr. Mark Selby, how are we, sir?
Very good, Mr. Matthew Gordon.
I am glad to hear it. Some fun times out there. Mr. Trump is over in Asia doing deals.
Critical
Is that
minerals
good
deal
news?
here, critical minerals deal there.
Yeah.
Again, the good thing, I mean, who knows how many of these will turn into something, but, I think that one of the themes we've been hitting on during this battery shows is, critical minerals are a national security issue. There's actually going to be there's a G7 critical minerals initiative. Those ministers are all meeting in Toronto this week, so should see some more announcements coming out there. Again, to underscore to investors, we're not quite there yet, but you are going to see more and more of the announcements that we've seen for the MP Materials deals and the Trilogy Metals deals. And so, see if you can identify those ones that should be next in line, and there should be some promising rewards for those investors who are able to pick well.
Right, and just to sticking with the kind of the Trump the bomb. What exactly do you think the knock-on effects are going to be in terms of all of these tariffs that have been going on? And will Canada re-engage with the US on that front, or is it sort of working hard to kind of stand on its own 2 feet?
No, well, we had a little bump this week with Canada. We were making good progress on tariff negotiations, and the Premier of Ontario ran an ad down in the United States using Ronald Reagan, a radio address from Ronald Reagan, where they took selective pieces out of that speech, and we're airing it in the U.S. And surprise, someone who's a free trader like Ronald Reagan didn't like tariffs very much. And so Donald Trump lost his cookies and basically sent the Canadians home, and is threatening an extra 10% tariff because we didn't take the ad down quickly enough. So,
right. Yeah. Okay. So I think the answer is Mr. Carney's working on standing his own 2 feet and doing his own deals until some sanity prevails. Right, well, we're here to talk about nickel, so we've got to catch ourselves up on what's happening, price range and activities from Indonesia and China. What's happening?
I would love to say it was a very exciting week, but another 3 weeks since the last time we talked, and another 3 weeks in the 15,000 to 15,500 range. That being said, we were spending more time in the upper end of that range, and again, I think we will break out through the upper end of that. Philippine ore prices have already ticked up $1 since we last spoke. And again, the thesis here is that we should see a price move in nickel driven by ore tightness as we go into the Philippines rainy season. You still have ore that was mined 3 weeks ago, 4 weeks ago, that's working its way through the system. But as we move into November, December, the amount of ore that gets mined, continues to shrink. So as we go through the fourth quarter, watching those ore prices tick up will be a key driver here. NPI prices and stainless prices, have drifted down. LME inventories up about 11,000 tons. We now have a grand total of 286 that LME and Sheffy have about 286,000 tons total. Again, as I've ranted on a few previous things, that's still about, in total, only about 1/3 of the reported surpluses that analysts have. Again, nonsense numbers, but again, nowhere near the flood of nickel that the surplus numbers that would be talking about. But again, we'll be tracking those ore prices through to year end, and we should finally start to see those flow through to higher nickel prices.
Okay. So basically, keep your eye on ore prices through to the end of the year, and we'll see what happens.
Exactly. Yep. Okay. Exactly. And then we, again, the lowest quarter for Philippine ore production is the first quarter next year. So it's not just through to the end of this year; it's also through into the first part of next year as well. So
okay, well, let's look at some of the drivers that people do look to. I think we've answered the question with regards to, many times with regards to what Indonesia is going to do in terms of not pumping nickel into the market. But the other key drivers that people look to are EV sales. Is EV still alive?
Yeah. So again, surprise, EV sales aren't dead. Year to date, September up 24%. China, Europe, and North America are up 24%, 32%, and 11% respectively. Now, U.S. sales had a big spike in September because Trump cut back a bunch of the subsidies that Biden had in place for EV purchases. So we are going to see U.S. sales struggle a bit in the near term. But again, they continue to grow. We're seeing strength in full EVs, plug-in hybrids, and hybrids. So yeah, again, last year's numbers were really affected by the fact that there was a pull forward in some German sales that then were reflected in Europe. Underlying going forward, still expect to see 15 to 20% growth. Saw the benchmark presentation in LME Week a few weeks ago when we're in London. They continue to see solid growth out through the end of the decade, and the read through for just North American nickel demand is another 300,000 to 400,000 tons of nickel for high nickel batteries. Which is a fraction of the battery plants that are currently being considered or on the books going forward.
Right, and I've noticed that Tesla revenue up as well. So I mean, as an indicator, has been a big indicator. Suggests that the good fight and from US or Western producers is still there, but the Chinese are still producing good cars, cheap cars, affordable cars. Has the kind of the profile of those of the type of car, the use cases changed any? What's that do for nickel?
So for us, again, in terms of the nickel end of the spectrum, right, the lower end, smaller cars, Europe and China will be largely LFP. You see more LFP creeping up into the mid-size range, but again, in North America, where we drive big cars, big trucks, big SUVs, you're going to need nickel batteries. And to date, I think almost all of the battery plant additions that are still being built are all high nickel NMC chemistries. One thing that has picked up in terms of sales is plug-in hybrids. Obviously, it's a much smaller battery that's there, but that plug-in battery, one of the key chemistries is a 60% nickel battery that's run at a higher voltage, and so that. Again, that's going to continue to soak up nickel units going forward. So
okay, and okay. Well, I think we'll keep a close eye on that as ever. I just want to come back to something we started off the conversation about, which is obviously the kind of US and other critical mineral investments that we're seeing globally. You named a few names there earlier, but there's a kind of G7 critical minerals initiative that earlier this week, which I talked to. But what exactly are they getting together, and what problems are they solving, and are they working together on this, or just individually seeking their own kind of, inventory and supply chain solutions?
No, so that's the key piece is this G7 Critical Minerals Initiative. Obviously, the thing here is there's not going to be a lot of new mines in Germany or France or the UK in terms of critical mineral mines. They're more concentrated in places like the Canada or the US, countries like Australia. And so, again, this is such a fundamental issue that this is something that governments together want to work on, so that it's not just, hey, Canada, it would be nice if you could help fund and advance a lot of critical minerals projects, and just don't send us a bill, just send us the minerals. The realization and the importance is that Germany, France, the other G7 nations are saying, look at we want these minerals. We realize they're only going to come from a couple of countries, so how can we collectively help finance and advance these projects to get the minerals that we need to get there? So this came out of some meetings in the summer. We had a bunch of G7 meetings in Canada. We hold the presidency of the G7 this year. But again, as you see, the meetings are later this week in Toronto, and I think you're going to see announcements through the remainder of the year and into 2026 in terms of how these guys are going to work together. Again, what that means is for good critical minerals projects, there's going to be more capital, cheaper capital, and a faster path to market for all those projects that are out there.
Right, and obviously, you've been having conversations federally for a while, and provincially for a while now. There's something called the National Priority Projects list, which they're trying to, I think, comes out later this year. What are they looking for? What's the kind of profile of the type of projects, and what are the drivers in terms of their decision making?
Yeah, so this is the national priority projects list. The new premier in Canada basically, wanted to, given the tariff wars we're having with the U.S., basically we want to stand on our own feet and really push our strengths in oil and gas and critical minerals. They're providing, ultimately this will be 20 to 30 projects, but what they're really looking for is, number one, scale. Is this big enough to matter? Two, is this something that's going to happen, in the near term and not 9 years from now, because they want to have that economic impact happen now and not later. Three, is there a significant Indigenous component in there that the Indigenous communities that these projects are, they're going to see a direct benefit from that? And four, does it help decarbonize? Is it clean growth? And so again, we won't know whether our Canada Nickel's Crawford project is going to end up on that list or not. But given the fact that we think we score pretty strongly on all four of those dimensions, we're pretty optimistic that when that next list comes out, we'll be there.
Okay, so you've got the scales, critical mineral. What do things like, and we've talked, I'm bringing up stuff we've talked about in the past here, which is obviously, only off the back of a conversation having yesterday with someone about, this morning, about ESG, net zero and all of those things. I mean, some of those phrases are less used than they were 3 or 4 years ago, but I know you put something out last week to do with net carb, which is obviously the kind of, unlocking zero carbon in projects. Does it still have value to you? Are you able to put a number on that? And does that make things easier when it comes to things like national priority projects?
No, for sure. Obviously, one of the 4 dimensions of that. So the release we put out last week was talking about effectively using our tailings to unlock additional value for the project. And so we announced last summer a partnership with a group out of Australia. They basically take a process where they effectively take our tailings, cook them for a little bit at a certain temperature, and that creates 10 times more of the reactive mineral that's in our tailings that already stores carbon. So the Canada Nickel IPT carbonation process allows us to store up to 1.5 million tons of CO2 per year. Their process allows us to store up to 15 million tons of CO2 per year. So, again, in terms of carbon capture and storage, a real step change and one of the largest carbon storage opportunities in the country. What our release did was really talk about, okay, how do you use that carbon storage capacity? The fact that we've got the main natural gas pipeline in one of the world's largest natural gas producers going right by our property, how can we combine those to look at things like producing blue-green hydrogen, to look at producing fertilizer that in Eastern Canada we have to import from offshore. It unlocks a huge amount of other industrial opportunities. And again, we're not going to pursue those directly, but we're creating the framework that will allow that to happen. And again, if you just look at something like hydrogen, 1 ton of our tailings helps produce effectively a zero carbon hydrogen product, 55 kilos of a hydrogen product. Blue green, it's not from renewable, which is green. We're not just burning fossil fuels and storing them. We're actually taking that carbon out of the environment and locking it in our minerals. But even if you're able to get 50 cents or $1 a kilo premium from making hydrogen, this way, that translates to $27 or $55 of additional value per ton of tailings. And remember, our NSR for the project as a whole, for the minerals we're recovering, is $30 to $35 a ton. And that doesn't include then the additional value that could be created by using that hydrogen to make ammonia, to make urea, to make a range of other products. So, we've really pushed that. We're not just talking about a nickel project. We're not just talking about a nickel district, but, that this is all really a whole, zero carbon industrial cluster. And because we've got rocks that want to store carbon, we just provide them the opportunity. We really have a very low cost path to be able to do that in reality. So it's pretty exciting, and we've got it's something that's caught a bunch of people's attention.
Yeah, well, I bet, because I mean, there's a number which kind of caught my attention. You put out an economic impact study a couple of weeks ago. 70 billion in GDP
Yeah.
impact across 40 years of life. That's definitely going to catch the eye of government, surely.
Oh, 100%. The other piece that we put in there, directly and indirectly will generate another $15 billion in tax revenue for all levels of government. When you have a large scale project, when you have these big disseminated ore bodies that can support, because you can afford to drill them off, relatively quickly and at relative scale, they have 40 years of there, you get to some very big economic numbers. And again, tying back to those 4 criteria that the feds are looking for in terms of scale, ready to go, First Nations and carbon impact. It just really underscores what Crawford can do. And remember, we have 3 or 4 other projects that we think are going to be better than Crawford ultimately.
Okay, exciting times. I think everyone will be eyes on that National Priorities Projects list when it comes out later this year, and see who the beneficiaries are. Because not everyone's going to be on that list. Right, let's talk about some company news elsewhere, if you don't mind. I'm going to start with the positives. First, Atlantic Nickel. What are they up to?
Yeah, so they've got they've got an ultramafic deposit in Newfoundland on the east coast. They're drilling. They're slowly stepping out. Again, doubled the strike length of one of their main targets. This is an aurorite deposit like FPX Nickel's Dakar project. And again, sort of getting similar type Davis tube recoverable nickel grades for that. So again, we'll see how that evolves. They haven't yet done sort of full metallurgical testing to see, ultimately what that final concentrate's gonna look like in terms of scale and quality. But so far so good in terms of outlining the potential that they've got there.
Okay, and Magna news a little bit positive, I think.
Yeah, some splashy. They put out 3 holes about a week and a half ago. Some very splashy intervals. Again, these types of deposits that these footwall type deposits, they're looking for. If you put a whole pile of different sized pebbles in a glass jar and then poured pure metal through those pebbles, this is the kind of deposit that these footwall deposits are. So some very splashy grades. You're looking at almost an ounce of platinum group metals, 19% copper, but again over very narrow widths. The key piece here is, and we'll see when they come up with an updated reserve for this, when you actually have to put a full mining width across it. But again, good to see some still looking for new life out of the Sudbury Basin, which has been going now for well over 100 years.
Yeah. Like obviously, it's some exciting numbers there, and it's I think positive news for the sector is what we need. A bit of dilution. They need to maybe kind of factor in some of the numbers there. Talon Metals also doing a little bit of work at the moment. Yeah.
So they picked up that property from Kennecott Exploration, which is a Rio Tinto subsidiary, a ways back. They currently own 50% of it, and to get the final 51% of it, to get the final 9%, they need to make a $10 million US payment and complete a feasibility study. That was supposed to be done by, I think, January of next year. They've negotiated a 12-month extension. So, that lines up with their feasibility study, which is expected later next year. And again, remember, think about 6 weeks ago, they put out some splashy intervals from some drilling they were there. So, stay tuned on that front in terms of additional results coming from Talon.
Okay. And then I think we're going to finish up a little bit, because I think you know a bit more than I do on this one, which is Next Metals Mining. The shareholder register looks interesting. How's the project progressing?
Yeah. So again, we've talked, a bunch about this. This was originally a premium nickel, then it became premium resources, and then it got sort of refinanced about a year ago, with a new Vancouver group into the mix. Again, this is one that I've expressed some concerns about before. There's a past producer that struggled in terms of producing concentrate grade. Yeah, a nickel concentrate. The copper concentrate's fine. The nickel concentrate, at a grade recovery, that is helpful from the economics. They announced a $65 million financing, yesterday. Again, just this financing, which comes with a full warrant, will effectively, it's equal to their current basic share count that they have outstanding. I don't know how many warrants they have that's there. the key piece is there when that deal was initially done by Premium Nickel. They had a whole series of contingent payments to be able to complete the full acquisition of the project. And so a big chunk of this is to go towards one of those contingent payments. Again, looking at what was being discussed on the chat boards, I think a lot of people were caught offside because that deal was struck 5 or 6 years ago. I think it's just a warning to for investors is always make sure that that's just one of the things to look into the financial statements. Future contingent payments are always put in there, and it's something that companies don't always highlight on the second page of their investor presentation. So just make sure that the company you invest has 100% of the asset, and if they don't have 100% of the asset, how much do they need to spend to be able to get full control of it? So
yeah. We do put up the warning signs. We do put up the warning signs. But look, I think it's good time broadly in the market. A lot of the metal groups doing quite well. Starting to see signs of recovery following the likes of obviously got the precious metal boys and girls and rare earths and even uranium. So I'm excited for the rest of the year. Do you kind of feel?
Oh no, very much so.
Place?
No.
Yeah.
No, I think the gold trade, again, the run up from the run up in gold prices and the run up in gold shares is actually, we are seeing it. We've picked up our share prices done pretty well over the last couple of months, and a chunk of that is new investors that we're meeting with, who are like, I just made a triple on a gold stock that I've been holding for 3 years. Do I think gold's maybe going to go up another 1,000? Am I sure it's going to double again? Maybe not. So, you're seeing people take profits from the precious metal sector, and start to look for other opportunities in other sectors that are undervalued and haven't had a run yet. So, there's a number. If you look, there's a number of nickel stocks and battery metal stocks that in the last 2 months have actually come off their bottoms, where we've been sitting, for the last 2 or 3 years. And again, I think you're seeing generalist money come into the sector because they were all underweight gold and underweight mining, and so I think the end of the year is going to be good. We're obviously in a little bit of a profit taking moment right now with the gold price, but I think we've a good foundation and should see a pretty robust 2026 for sure.
Fantastic. Well, people should take money off the table. Absolutely. That's the name of the game. No problem with that. It's never a straight line. Mark, good to speak to you, sir. We will catch up with you maybe in a week or two.
Sounds great, sir. Take care.